Good morning, trading world. It is March 25th, 2021, 12 minutes after 8 a.m. And this is my pre-market outlook. All right, put on your helmets, buckle up. It's coming. You might ask what? There is a roller coaster ride of volatility coming soon. Usually when you ride a roller coaster, the thing that's going to be so different about this roller coaster ride of volatility that we are probably about to experience is that usually when you ride a roller coaster, you get on and you go through this slow tick, 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 grinding all the way up to the top of that first incline, and then whoosh, you go screaming down. It's going to be very different, this roller coaster of volatility that we're possibly about to embark on. This one is going to be more so tick, tick, tick down. And then we're going to go screaming up. And then more of a steady pace down for quite a while. And then eventually another screaming up, only to have more downward flow at a steady pace. That's what I see coming. Now, I would have thought with all the stimulus, liquidity available, that this would probably be months away. And I still may be wrong. It could be still months away. And this could just be the tremor signaling that big earthquake move that's still some time away. So with that being said, if you have a portfolio, if you have a basket of stocks, you should be hedged. Protect yourself, protect your gains that you've made. Don't give them back. Now, on to today. Something else that's very important today. We have a market maker's expected move. And this move is, let's see if we can put it up here. The upper end of this move is 396. Let's see if we can get it all on the chart. Okay. The upper end of this expected move is up here around this 396 area. The lower end of that move is around this 382 area. Now, we came into the week and started at this 389 and a half area. Now, on a consistent basis, we've either tagged the upper end or the lower end of this expected move. I don't expect that to change. there is a high probability that either today or tomorrow we tag one of these ends of the expected move. So that means there is a big move in store either today and or tomorrow. So I want to prepare you for that. Also, there's an important area. I marked it off weeks ago. There's a channel. Can't see it here. I have to go to a larger time frame. Here, give me just a second. All right, larger time frame. This is a 1 year daily. As you can see, I have a channel marked, and this goes back over a year. But if you can see this channel here, that's a very important channel. And let me zoom in here to this area. What's important is that again we're breaking below the channel. And if you can remember back here, 1, 2, 3, and I think we even came close another time, but third time may be the charm. I said a while back, the moment we close below this channel is the moment all hell breaks loose. Here we are again. Will it happen? Will we bounce back up? We're about to find out this week, seems like. Let's get back to our hourly chart. Give me just a second. All right, now we're back at the hourly chart, and before I get into the outcomes for today, another thing that I wanted to kind of point out, we had a basically 5.2 points move on the SPY yesterday, and it was almost straight down. Almost straight down. And we did that with a fairly positive advanced decline line for the day. So, something to really think about. If we move like that with a fairly positive advanced decline line, what happens when we get all of those things on one side of that line? We get 90 issues down, or 90 or 90 plus issues down to 10 or whatever up. That could make for a long ride down. So keep that in mind for all of those who think, you know, we've seen some movement or seen some activity. We've seen nothing yet. So, going into today, the outcome for today. Again, focusing on identifying day structures as soon as possible. The overnight session, we had kind of a spill down coming into the morning. So that is going to give us a decent sized gap down. So that brings into play our trend day structure. So with the trend day structure, we get a gap down. Let's see, the close from yesterday was 387 and a half. Actually, it's not that big of a gap down. 387 and a half, 387.48. So that would put us about here. That's yesterday's close. On a trend day down model, you're going to see an attempt to fill the gap. And this is going to be an important level to let us know whether this is going to be a trend day, Trange day, or another lopsided range day. Because if we can't break this area right here, it could be game over for the day. With a target of 382, we're going to push almost straight down. So that 387.5 area is going to be very important. Whether that resistance holds, it's going to be very important. Now, the other thing about a trend down day, the internals are going to open at an extreme. If the internals were here, they should open gap down and continue to operate at that extreme level for the big portion of the day. So that's what we're going to be looking for outcome number one, which I've given a 50% probability of happening. Now, outcome number two, which is a rounded reversal, or what I like to call a Trange day. It is similar to a trend day. The characteristics are very similar. Gap down, strength. This yesterday's close again is going to be very important at this 387.5 area, if we even come back toward it. But again, a failure would lead us straight down. But what happens on a Trange day or rounded reversal is that, looking at the internals are going to diverge from what price action is doing. If price action opens up and then heads straight down, you're going to see a slight incline on internals, where it's slowly making its way up to a point at about midday or somewhere late in the day. You're going to get a big tick kickoff up, and prices are going to rebound, which is going to set up for a huge two-sided trade. So you have to be very careful on that, especially with expiration day coming tomorrow. You have to be very careful about a bounce coming, because we are in that condition where on a lot of the time frames we're either oversold or about into that oversold territory. So with that condition existing in a number of time frames, it's likely that sooner or later we get a big bounce. So that is outcome number 2, in which I've given a 40% probability. Now, outcome number 3. Outcome number 3 is basically if we can hold here and here, we're going to consolidate and build up a little more energy before breaking higher or lower. As you can see, I only gave it a 10% probability, and that's because there is plenty of energy in the higher time frames. So we could really get some movement today and tomorrow. So consolidating, if we do, I don't see it happening very long, because we have a lot of ground to make or cover. So again, these are the 3 outcomes. Yesterday I started putting on a lot of put options on the SPY, because up here we had kind of seen before at another level, we identified some price patterns or candlestick patterns, the dark cloud cover that confirmed resistance. And when it confirms resistance like that, from that point on, with everything that's going on, you kind of look for pops to get more shorts on. So that's where we are today. Again, be very careful. Always know your risk. Please operate with a bracket, a stop loss. And wishing you a profitable day. Be safe. And I'll see you in the trading later